So, ladies and gents, firstly, thank you so much for taking the time out of your evening to come and hang with us. Adrian has put together a presentation today, and I was talking to him throughout the day. This is the third version of the presentation that is written. And the reason it's the third version is because the material from the ATO is changing very rapidly, so much so that today he's basically rewritten the presentation at short notice to allow for that updated information. So there's a fair bit of stuff that we're going to be covering. Now, on that note, I'm expecting that our presentation tonight is going to take somewhere around 50 to 60 minutes or thereabouts. What we're going to be doing today is a little different to what we've done on previous webinars. Is we're going to save all the questions to the end. By all means, type them in as you need to. I'll still be looking at them and curating them and all those sorts of things. But what we're looking to do today is to make sure that the people who want to just come and listen to Adrian speak and then go off and do something in the evening can do that. Those that want to hang around for questions and answers at the end are welcome to do that as well. We're trying to keep this tight and concise so that you get the information you need to help you make the decisions that you need to make in order to be able to, move through this COVID period. And equally, we want to try and make sure that those people that have questions, that there is an opportunity for them to be answered as we go. Now, I can see that there's a lot of dentists on the call, and it's good to see so many of you here. I know there's a lot of people who are not dentists on the call, and it's great to see you guys here too. For the non-dentists on the call, my name is Jesse Green. I run a business called Savvy Dentist, and I look after a lot of dentists in the coaching space. And I'm really here to try and facilitate, because Adrian is going to be concentrating on content delivery, which is his area of expertise. And my job is to just coordinate the questions, make sure that the logistics are happening seamlessly so he can focus on what he needs to do. It's a tough job trying to present the content and field questions and all that sort of stuff. So I'll take care of that. For the dentists on the call, again, just to be crystal clear, yes, we are recording. Yes, this will form part of the COVID care pack, which you can grab for free at savvydentistacademy.com/SDA free. So savvydentistacademy.com/SDA free. And there's a few resources in there, apart from these recordings, that we've put together to help you through this period. Things like a 13-week cash flow forecast, heaps of stuff. So it's there for you. So please, in the questions, please don't ask me over and over again, will this be recorded? Yes, it is. Adrian is going to send it out to his clients. We're going to make it available to dentists. So hopefully that covers everyone right there. So without any further ado, I'm going to hand you over to Adrian. Mate, thank you so much for all the work you've been putting into this. I know that, rewriting a presentation 3 times is so much fun. So I'm going to mute myself, mate, and over to you, Adrian.
Yep. Cool. Thanks, Jesse, for the introduction and kind words. I apologize in advance. This is super heavy content, because what I wanted to do is cram as much in as I can so you guys can watch and listen at your leisure at a later date. What I've basically done, as Jesse intimated, I've literally finished this presentation at 5:15 this evening. So hence why I was a little bit rushed coming on here. So I do apologize, but the stuff originally got updated on the 9th of April, and then another update on the 11th of April, and another update today. So I found out the last update, which my third rewrite, was this afternoon. So when I spoke to Jesse this afternoon, it was a different conversation to what it is now. And I said, I've added heaps of slides because things have changed in the last few hours, but I'd rather quickly cram in as much as I could so you guys can get as much in as you possibly can. And so without any further ado, I'll get stuck into it. Now, as it says here, JobKeeper updated literally as of today. Right, this is for people who haven't seen my prior presentation on JobKeeper a few days ago. I'm only going to, I've got the slide here so you can read it later. I just want to really highlight probably the things that have mainly changed from last time, or things that I really wanted to draw your attention to. Now, the first thing is, you all will have known that the JobKeeper is about $1,500 a fortnight before tax. Just to let you guys know that tax on $1,500 per fortnight is $192.50, because when you pay your staff, we're going to come through it later, but when you pay your staff, you have to deduct normal tax from their earnings, their wages. And just so you know, tax on $1,500 is $192.50. That's where the tax-free threshold's claimed, and normal Medicare. Now, the only other bits that have really changed or been clarified is JobKeeper is paid monthly in arrears, which I'll cover a little bit later. And don't expect any payments from the ATO till early May. And I'm telling everybody, and anyone who's been on my webinars prior to this would know I've been saying, you're going to have to probably be able to come up with enough cash to survive probably till mid-May before your stimulus payments start hitting and before the JobKeeper and all that. The payments are not going to be through till about the first or second week of May. So I'm saying mid-May, you've got to prepare yourselves cash flow wise. And I had a webinar the other day on starting to look at the numbers you need to survive as a business owner and also as a individually. So that's an important element of being able to survive that. Once again, I've put this slide up because it's a recap. I'm not going to go through it all, but the things that have changed is that it's payable from the 30th of March 2020 until the 27th of September 2020. They've changed the eligibility for turnover. So what that means is, I'll read it so you can hear it clearly. The business has a turnover less than $1 billion for income tax purposes, and they estimate their GST turnover has fallen or will likely fall by 30% or more. Now, GST turnover is taxable supplies plus GST-free supplies. So you dentists that are on here, a lot of you, depending on the way you're structured, depending on whether you've got employee dentists or you've got the other arrangements that you have with the 60%, 40%, GST-free supplies and taxable supplies equals GST turnover. Now, the next important thing, the employer must have been in the employment relationship with your employee at 1st of March. Now, payments for JobKeeper. Payments for JobKeeper are going to be all handled. So, in other words, everyone's required to be on, well, single touch payroll now, which is basically, for those of you who don't understand it, it's a way of reporting your payroll to the ATO, and it makes for an easier end of year reporting adjustment and cross-checking by the ATO to your records, to your business records, sorry. Now, basically, JobKeeper is going to be handled through single touch payroll, and all the details that get filtered through to the ATO is what they're going to use to cross-check on the other side of this. And for self-employed individuals, you needed to have an ABN on them before the 12th of March, and they wanted you to have assessable income for the 2019 financial year, or at least have made supplies that are taxable from July 18 to March 20. I'm not going to go through this again because I'll leave it there for a second, because that's what I mentioned last time. I'll leave it there for a couple of seconds and I'll go through to what's come up today. This is one of the things that you'll know the slides I've added today, because I've had to literally copy them in like this because I just didn't have time. So basically, to support your 30% or more fall in income, this is how the ATO are looking at it. They're doing JobKeeper on a fortnightly basis. Now, I'll come to that a little bit later in my slides, but what they want you to do is they want you to work out for the first fortnight, starting on the 30th of March, this is how you can work out whether you've had your 30% or more fall in turnover. You can compare it to either the GST turnover for March 20 with the GST turnover for March 19. So in other words, the month of March 20 against the month of March 19, projected GST turnover for April 20 with GST turnover for April 19, or projected GST turnover for the quarter April 20, which actual GST turnover for quarter April 19. Now, the next three paragraphs are quite important. So the reality is they would prefer to use BAS periods because it's a lot easier to marry up. However, they're not really concerned about that, really. They want you can apply any of those things, any of those methods above. Now, if you work out you qualify for JobKeeper for the first fortnight because your turnover's declined by the relevant percentage, this is really crucial. You remain eligible and do not need to keep testing in the remainder of the months. So that's important. I'll go through that again. Once you pass this 30% or more test, and they're saying for the first fortnight because that's how JobKeeper works, it's fortnightly. Once it's past the relevant threshold, you remain eligible and do not need to keep testing in the remainder of the months. However, you will have to provide ongoing monthly reporting requirements, which information will be required. On that further. I think what's going to happen is all they want from you each month is who's eligible, how much have you paid them, and who continues to be eligible. So they know exactly how much they need to pay you back. Right. Now, the ATO has also set out alternative tests to establish eligibility for turnover reduction when you don't have something to accurately compare it to. For example, if your business has been in operation less than a year. Unfortunately, that once again, they're going to be providing more information about that. Now, there's a bit of that coming through the slides in some sections. You just have to go, okay, I'm going to know a lot more by the end of this, but there'll still be a few loose ends, right? Which we will clarify as we get clarified to us, okay? Background on eligible employees. I'm not going to go through it all again. What I really want to mention is the things that have changed. And I'll draw your attention to point 3, where it says full-time, part-time, or long-term casuals. What's changed is a casual employed on a regular and systematic basis for longer than 12 months at 1st of March. So that regular and systematic basis has been what they've added in. So what they're really saying there is they're really wanting the casual to be almost like a part-timer, that their hours are pretty consistent, and like same hours each week, similar hours, etc., etc. Some degree of pattern, right? That's what they're expecting to see. The next thing that's changed is it had to be at least 16 years of age at the 1st of March and an Australian citizen or a permanent visa holder at the 1st of March. They're the things that have changed from last time. Application process. I'm actually not going to go through that. I'll leave it up for 30 seconds or so because you can actually pause the video and read it again anyway for those who weren't on my last presentation. And again, for businesses without employees, I'll leave it up. The only difference here is it used to say self-employed business. Now they're saying an owner, the owner of the business and the owner's tax file number and the person's bank account. That'll make more sense to you when I go through a slide a little bit later about some of the things the ATO have changed in the process since we last had our presentation. Okay, this is all new stuff. And as you can tell, it's the way it's written. All right, now I apologise, it's heavy, but I want to go through it all in great detail here so you can at least go back to, and watch it over again. One thing I will say to you, and I think when I get to the end of this section, you'll go, yeah, I get you right. It's having a switched on, proactive accountant, tax agent in this JobKeeper stuff is going to be crucial for you guys, all of you, to take some pressure off and to know that everything's being done correctly, because there's a lot of dotting the I's and crossing the T's with everything here, and you'll see that in a minute. And I think if you've got someone who's got your back, it'll take a lot of pressure off you guys. There's stuff you guys have to do as business owners that we as accountants and tax agents can't do. But we can also drive a lot of this and make sure that you're doing what you need to do when you need to do it. As long as you do your bit as well, then the whole lot will move forward in a nice, easy and synergetic way. So to enrol and apply. To enrol for the JobKeeper payment from the 20th of April, there's 8 steps. You register your interest and subscribe for JobKeeper payment. Now, I covered this last, but I'm going to go through it again. What you do is you go onto the ATO website and you fill this in, JobKeeper payment, register your interest, and that information there, business name, ABN, contact name, email, and mobile's all there. And just to give you an idea, I literally got a text, because I did this a few weeks ago. I got a text from the ATO today telling me that the JobKeeper status has changed. But unfortunately, they must be a bit slow there, because I already knew about it before I got the text, and that's why I got this text at 4:30 this afternoon. If I'd known about it at 4:30, I would have been stuffed. I wouldn't have been able to put all this in. So luckily I knew in advance about it all, but I got a text today to tell me to go and have a look at the changes. So you go through this process if you haven't already done it, and then you'll be told you're registered. Well, you're not actually registered. You just registered your interest, right? So I'll just go back to here again. So that's step one. Most of you have probably already done step one, okay? Step two is to check you and your employees meet the eligibility requirements. We've covered that before, and we'll briefly go over it again. Step three, continue to pay at least $1,500 to each eligible employee per JobKeeper fortnight. Now, the first JobKeeper fortnight runs from the period 30th of March to the 12th of April. Now, a lot of you are going to be sitting back going, that doesn't align with my payroll. And to be honest, I don't know what the hell we're going to be able to do about it, any of us, right? So at the end of the day, that's what they're basing, what you pay for that period is what they're going to be basing their return payment back to you on. So there might be a timing issue here, but I don't think there's anything we can really do about that. But I just thought I'd mention that. Step four is to notify your eligible employees that you're intending to claim the JobKeeper payment on their behalf and check they're not claiming it through another employer or another nominated business. Step five is to send the JobKeeper employee nomination notice to your employees and get them to return it to you. And this is what they're putting here by the end of April to make sure you can claim your JobKeeper payment for April. Now, you don't have to send it to the tax office. You keep it on file, and would be a good idea to provide a copy to your registered tax agent if you are using one. Now, I'm just going to go forwards for a second. That I've only cut it in here just so you can get an idea. On the ATO website, there's a PDF version, which is editable, so you can actually type it in, a PDF version, and save it. And there's also a Word version that you can type in and save. I will open the form in a minute, but I just want to keep going through these steps 1 to 8, and then I'll come back to the form. So sorry about that. Right. So that's your nomination notice, and I'll go through that in a minute, okay? From the 20th of April, step 6, you can enrol with us for the JobKeeper payment using the business portal and authenticate it with MyGov. And once again, you must do this by the end of April to claim JobKeeper payments for April. Step 7, in the online form, provide your bank details and indicate if you're claiming an entitlement because of business participation, for example, if you're a sole trader, and that'll make more sense in a minute. And step 8, specify the estimated number of employees who will be eligible for the first JobKeeper fortnight, 30th of March to the 12th of April, and the second fortnight, which is the 13th of April to the 26th of April. And as I said to you, I think the main thing that's going to happen here is that you're just going to have to provide an update all the time of the number of employees, and that should filter through automatically, I think, through the single touch payroll software. So that's the 8-step process. We've gone through that. Now, there's something I wanted to mention on here. You guys should have already registered to enrol, which is what I went through before. If you have registered with the ATO for an update, you will receive a notification when the ATO online enrolment is available, which is then when you go and do it. And you should also get regular updates like I did today. I got a text. Now, what I'm going to do, that's when you click on, just so you know, go back a little bit. When you click on the JobKeeper, this thing here, the JobKeeper employee nomination notice, what it does is it takes you to this screen, okay? And at that screen is where you can download the employee nomination notice PDF version, which, as I said, is editable, or a Word version. So you've got both versions available. Now, please note the thing down the bottom. So the last 2 points down near the bottom. Both you and the nominated employee need to complete the form. And as already said, you don't need to send a notice into us, but you need to keep it on file. So it agrees with what you're paying, who you're paying JobKeeper for. Now, the bottom bit, you should not use this nomination if you're intending to claim a JobKeeper payment for an eligible business participant, which I'm going to cover in a minute. For example, a partner in a partnership, a beneficiary of a trust, or a shareholder or director of a company, or even a self-employed sole trader. A different form is going to be required, and that's not available at the moment. Okay? Now, I'm just going to, just bear with me for a second, get out of here. And I want to take you into the PDF version there. So there's the PDF version, right? I'm just going to full screen it. It's editable. Now I'll leave it up on screen for a minute or two, but it's pretty basic. The employer's details up the top, then the employee details in section B. And as I said, it's editable PDF, so you can actually type stuff in and then save it. Date of birth, addresses, nominations, tick some boxes. Yes, I agree to be nominated. No, I do not agree to be nominated. And signed by the employee. And they say signature, electronic email is okay. And you date it, and then you can hit save form. And there's a Word version identical to that. So hang on a second. Let me just get the, sorry. Let me get this back up again. And from current slide. Okay, now we're back there. Sorry to digress, but I wanted you to see, I wanted you to see the form and how it looks. I think if looking at it, I would be using the PDF version because it looks a lot easier, and because you can type in and save it, you could type in some employer details and just do one for every employee, so it would save you a bit of time. Now, the next step is confirmation of eligible employees to claim the JobKeeper, which is going to be available from the 4th of May. There's again 8 steps for this. I did say to you this is pretty onerous, as in, I did say to you it's pretty onerous, right? So step 1, apply to the JobKeeper payment by logging into the ATO portal. And there's the ATO business portal there, just so you know, just to show you a shot of that. Ensure you paid, these bits are really important. Ensure you have paid each employee their $1,500 per JobKeeper fortnight before tax. Step 3, which is what I alluded to before, identify your eligible employees in the application form by selecting them through your single touch payroll pay report, so they know who you've paid it for and who you're claiming the JobKeeper for. That's going to be the simpler way, but there's a manual way of doing it through the business portal as well, or through a registered tax agent on your behalf. But the single touch payroll is going to be by far the most efficient because you're paying it anyway. It'll just flow across. I imagine that Xero and the likes are going to have to add some reports in there or some details in there about, yes, I'm doing JobKeeper for them or whatever. So step 4, submit your confirmation for eligible employees online and wait for a confirmation email or SMS showing it's been received. Notify your eligible employees you've nominated them. Then step 6, the HR will pay the JobKeeper payment for all eligible people after receiving the application. Step 7, each month you need to reconfirm that your reported eligible employees have not changed, which is what the monthly requirement is going to be each month, is to do that. And it reiterates again midway through step 7 here. You do not need to retest your reported fall in turnover, but you will need to provide some information as your current and projected turnover. So we'll have to wait and see what all this means. And there's going to be a monthly declaration report. Once again, we're going to have to wait and see what that is. I don't think it's going to be too onerous somehow. And if your eligible employees change or leave, you need to notify the ATO as soon as possible. And what you need to do for your employees, that was what you needed to do as an employer, pretty much the top. What? No. The top 2 bits was what you needed to do for as employers. Now, for your employees, you need to identify who you're going to claim the JobKeeper for and tell them. You need to give them the nomination notice, which I've already touched on. Now, the second but last point is really important. If your employees have multiple employers, they need to choose which one they're going to nominate through, because it's really important. You can only claim it through one employer. So usually that would be done from where you're claiming your tax-free threshold, but it's probably worth double checking to make sure that you're only, because they'll be all over that. You'll only be able to get it from one employer, okay? And if you're getting income support from Centrelink or wherever, you have to let them know you're getting JobKeeper, because that will affect your entitlements. Okay. The next part of this payment, JobKeeper thing is actually paying your staff. So the rest of it was all the pre-bit to be ready to go. And this is actually making the payments. So there's a few steps. The first one is paying your employees. And you guys will already know this. You've got to pay at least $1,500 per fortnight per employee gross, even if they earn less than that. You cannot pay your employees less than $1,500 and keep the difference. You will not be eligible if you pay them less than $1,500 a fortnight. How to pay? Well, basically, you're just going to be paying through your payroll software. When to pay? I've already covered the first 2 fortnights. The first 2 fortnights are the 30th of March till the 12th of April and the 13th of April to the 26th of April. Now, they've said quite generously, because of how late this is coming in, that they will accept $1,500 payment for each fortnight's been paid by you, even if it's paid late, provided it is paid by the end of April. So because there's a bit of a catch-up going on, everyone knows that at least they're being remotely practical. But please make sure, if you want to get JobKeeper and you want to get it for the month of April, you've got to make sure that by the end of April, you've paid your $1,500 per fortnight gross per person who's eligible, okay? And it's, and once again, they say if they leave employment, please notify them. Now, I'm not going to go through this. This is all pretty straightforward. That's basically $1,500 per employee. I'm going to cover an example about that in a minute, but I just wanted to show that this is, now, tax consequences. I've been waiting on this because I've asked so many times the tax office and I couldn't get an answer. All JobKeeper payments are assessable income of the business that is eligible to get them. The normal rules of deductibility apply. What that means is when you pay your staff wages, that's tax deductible. When you receive JobKeeper, that's income. There is going to be no GST on that JobKeeper payment, okay? Super guarantee, basically, what's going to happen there is that it's the intention of the government to not require super to be paid on additional amounts other than what employees normally earn. I'm going to cover that in an example, so I'm going to keep going till I get to that. Now, what you can't do, I've reiterated this, but they wanted to highlight it. You can't claim the JobKeeper payment for employees who were not paid the minimum $1,500. Okay, and you can't claim JobKeeper in advance. It is and I've said this earlier, it is in arrears payment, which means effectively you've got to fund the whole month before you get a cracker back from the ATO. So you can't get anything in advance under any circumstances. And as I reiterated before, most businesses are going to have to allow for 6 weeks of cash flow and expenses and managing it all before they get a cracker from any stimulus payment, JobKeeper, anything that's out there. You won't probably see a cracker till probably around the 1st or 2nd week of May. So please make sure you plan around that and have your minimum numbers to survive factored into this. Okay, I said I was coming to this. This is crucial. One of my biggest bitches last time was that they only covered self-employed sole traders as being eligible to get the JobKeeper if they don't have employees. They've wised up and they've changed it all, and I think these changes are very practical. So what it means is, what they were basically doing before is they were saying the only way you get to claim this is if you're running a sole trader, self-employed business. Now what they're saying is if you're effectively self-employed, but you're through a sole trader, a partnership, a company or a trust, you're still going to be able to get some aspects of JobKeeper, which I'm going to cover in a second. I'm going to go through them each one at a time. Sole trader hasn't changed. One owner can be nominated to receive the JobKeeper along with any eligible employee. So legitimate employees who you hire other than yourself, because you can't be an employee of yourself, they will be covered, as will one owner to receive the JobKeeper as well. As I said previously, we're not sure what the paperwork's going to be for that yet, but we will find that out in due course. Partnership, like with a sole trader, one partner only can be nominated to the JobKeeper along with any eligible employees. Please note, like with a sole trader, a partner can't employ themselves, nor can a sole trader employ themselves, just under the way that those entities' laws are written. If you've got two individual partners who are not related, that could be an interesting discussion to work out how that's going to be managed. But you can, if it's a husband-wife, that's a lot more straightforward. But if it's bloke A and bloke B, it's going to be, you're going to have to work something out how to divvy that up between the two of you. Now, where your business operates through a company, one director can be nominated to receive JobKeeper along with any eligible staff. And this is an interesting one, the next one. I thought this is a really interesting concept. Where the business operates through a company and has shareholders who provide labour to the company and receive dividends in lieu of wages, one such shareholder can be nominated to receive JobKeeper along with eligible employees. Now, I'll pause for a second. You guys are all smart, switched on business owners. What I thought when I read this is, can I double dip? Can one director and one shareholder effectively, for the same company, claim JobKeeper? And the answer is, I don't know the answer to that yet. I'm tipping they're not going to allow it because of the way the intent of this rule is written, but it's not clear yet. But I've got a feeling it's going to be one or the other, either one director or one shareholder. I don't think you're going to be able to double dip through a company. And where the business operates through a trust, one individual beneficiary, so not a corporate beneficiary. So to explain what a corporate beneficiary is, if you've got a discretionary trust, you can have a lot of beneficiaries listed. It might be mum and dad and other companies that they're shareholders or directors of, or it might be other discretionary trusts that they're beneficiaries of. What they're talking about here is you have to nominate an individual beneficiary where they get trust distributions rather than getting wages. They can be nominated to receive JobKeeper as well as any eligible employees. Now, this to me was one of the biggest flaws of the previous thing, and this one that I was really annoyed about. So I'm glad they've seen the light and put everyone self-employed in the same basket effectively, which I think is a really good step. Now, I said I'd go through the example. I went through it last time, but I really want to go through it again because it's really important to understand how everything offsets. So the first example is where you're an employer with multiple employees and you've suffered the requisite 30% drop. You had Anne, who's a full-time employee earning $3,000 a fortnight, Nick, a part-timer earning $1,000 a fortnight, and Fred, who got stood down because the business obviously couldn't fund it. Now, assuming you're eligible, how it works is as follows. With Anne, she continues to have her $3,000 paid because the business is funding that for her. What happens in that case is the business still continues to fund her $3,000 gross a fortnight. And importantly, they have to pay super of 9.5% on the $3,000 per fortnight. And the $1,500 you get from JobKeeper is effectively a subsidy to help to put towards Anne's salary. Part B is really important, part C, because they're the ones that are slightly different. So with Nick, who was a part-timer earning his $1,000 gross a fortnight, now he's getting $1,500 a fortnight. So there's an additional $500 Nick gets. Now, remember I said before, you can't do anything dodgy. They have to receive the whole $1,500 or you won't get any JobKeeper subsidy. The important to note here is with superannuation, the business has the choice. They don't have the choice on the $1,000 because that's his normal gross. You've got to pay the 9.5% super, but the business has the choice to pay super or not on the extra $500. Okay. And I imagine most businesses won't, but that's just aside. You can choose to, you don't have to, right? Unlike the 1,000, you have to. And the 3,000, you have to. Now, the business, because Fred was stood down, Fred now has to start getting a gross salary of $1,500 a fortnight, which effectively is fully subsidized by JobKeeper. The business has the option of choosing to pay super on the whole amount because he wasn't paid anything before he was stood, effectively because he wasn't still earning a gross salary, then you have the choice of deciding whether you want to pay super on his 9.5%. Second example, self-employed. Now, that means company, trust, partnership, sole trader, whatever, right? That's what the definition of self-employed. In my example, with no employees, if you were self-employed with employees, as I said, you could pick one person who's not an employee and still get JobKeeper for it. And then this example, sole trader Melissa, economic downturn. Basically, Melissa will nominate herself as a sole trader and get her $1,500 a fortnight before tax, which is paid to her monthly in arrears. So I think those two examples really highlight the main part of how they're going to be applied. Now, I'm going to come to FAQs in a second. What I wanted to cover here is some common questions that I thought of or that the ATO have come out with that weren't clear through a lot of the other stuff I'd read. So I wanted to quickly cover all that stuff off as well. I've already said this, JobKeeper will start on the 30th of March and finish on the 27th of September. You now know why it's finishing the 27th of September. It's a strange date, but that's when their fortnightly cycles run. So that's why that finishes then. Eligible payment periods. it's going to be 14-day cycles to marry up with the payments, $1,500. And the first pay, I said, is 30th of March to the 12th of April. And the last pay period is 14th of September to the 27th of September. What if I've stood by my employees and are no longer paying them? Well, that's okay. To be eligible, you've just got to pay them their $1,500 a fortnight and continue to pay them. If you want to continue to get JobKeeper, you have to continue to pay them through that process. Now, my turnover is not decreased by 30%, but I believe it will be. I've covered that earlier of the other mention about the GST, and there's going to be some further guidance come out on that. So I won't mention that. Now, this is really important. I've had this question already a bit. What happens if I don't have the cash to pay my employees until I get JobKeeper? Because remember, JobKeeper is a payment in arrears. So as I've already alluded to, you've got to pay it for the month of April before you see it back in the month of May from the government. So effectively, it's a reimbursement scheme for something you've already paid. Therefore, crucial, you must fund the wages for the month prior to getting a cent back. I know I've already said this, but I want to mention it again. This is what the ATO have come out and said. Where you've got cash flow difficulties, speak to your bank. Wonderful. And the banks may be able to use the JobKeeper payment as a basis to seek credit. Knowing what banks are like, I reckon you're pushing, uphill, to be honest. But on that note, I actually spoke to my broker today who was on a prior call, one of our webinars last week. God, it feels like about 3 weeks ago, but it was last week. And I actually wanted to ask her, because I knew it was a pertinent question given everyone that's on the call today. And for those of you who are on that webinar, there's two main ways of getting finance supplementation to help you get through this period, right? The first one was to defer interest payments for up to 6 months. And the second was to potentially get, a 250K unsecured loan that's partly secured by the banks and partly secured by the government. Now, I know for a fact that there's lots of people, and a lot of these things are done online. So the 250K, and I think I alluded to this last time I was on the webinar, I went through the process of applying for the 250K loan through Westpac because that's the bank I'm aligned with just for ease sake. That was done online. You asked some questions and this and that. And same with the interest deferral. That was all done online. But I know there's quite a few people. I know of one example personally, a client of ours who actually asked to apply to defer their payments some 3.5 weeks ago. Still hasn't heard from the bank. I asked Melissa if she could get an idea or an update of timing of the 6-month deferrals and also the 250K loans. Now, for all you guys that know the banking system, the banks aren't coping because the majority of their call centres are in locations like the Philippines and India where they're basically shut because of COVID. So they're having to try and rely on staff in Australia to try and manage all this. And I've got a feeling that's why they're so massively behind, okay? Now, she couldn't get Westpac or NAB today, but she did speak to CBA and ANZ. So I thought I'd relay what she got told today about that. What CBA said is they're lucky, their technology is so advanced, unlike the other three majors, that those people who have been applying to defer their payments, it's getting processed within a week, which is bloody awesome, right? ANZ said they couldn't give her a time frame, no surprise. And I know that I'm with Westpac and I know that I sent something to them at least 2.5 weeks ago. I'm getting regular emails to say we haven't forgotten about you, we're coming, we're so busy, but no one knows how long it's going to take. My gut's telling me the longer this goes on, the more likely they are to rubber stamp things to get things over the line instead of make it too onerous to ask you questions and all that sort of stuff. Now, on the 250K loan, CBA said they're approving applications within 2 to 3 weeks from application, and they've done online. Once approved, funds are deposited into the client's business account. They've already funded over $1 million since they took the first application 3 weeks ago. That was CBA. ANZ, same story. Most applications are being assessed and funded within 2 to 3 weeks. ANZ did say that some credit assessors are asking for 6-month cash flow forecasts depending on the applicant. Now, I've got a feeling the government didn't intend 6-month cash flow forecast to be part of this when they were, because this was designed to be part of a stimulus credit that was meant to make it a lot easier to get the money for businesses to survive through this 6 months of hard yakka that's coming ahead. So I don't know about that, but so 2 to 3 weeks from application. So I thought people might like to know that, because there's a timing element to everything. Okay. Now, she did say to me, I asked about normal refinances, because that was the third option to try and free up money. And she said at the moment, normal refinances are getting pushed back because this other stuff's taking precedent, right? So the 6-month deferrals and the 250K unsecured loans are pushing to the front, and the normal refis are so they're pushing out to 4 to 6 weeks refis now at the moment, which is way beyond normal. She did say to me that Bankwest, who are not one of the 4 majors, are still getting through their refinances really, really quickly. So it's obviously the 4 majors that have been swamped and aren't coping. Okay. Am I required to pay PAYG withholding and super? Well, I've already covered this, but basically for your fortnightly payments, you've got to deduct normal withholding, PAYG withholding tax before you pay it to your employee. And as I've already said, whatever their normal wages are, you've got to pay 9.5% super on it. If you're anything above that, so in my example, the $3,000 was the normal salary, you pay your 9.5 on that. The 1,000 normal salary is what you paid the 9.5 on, not the extra 500, and none of the 1,500 where they were a stood down employee. What happens if your employee resigns? You must let the ATO know, and it's possible that you might need to refund money. I don't think so, given it's in arrears. I think it'll be a matter of if you get on top of it straight away, there won't be any issues. Now, this is the important part, because I asked this question, which I think this answer really, really does suck. And that is, if you hire someone after the 1st of March, no matter what, you will not get a cracker of JobKeeper. So if you legitimately hired someone after the 1st of March who wasn't an employee at the 1st of March, they have categorically said, because they weren't engaged as an employee at the 1st of March, you will not get a cent. What if I purchased a business in the last 12 months? And there was a really good example where they retained some casuals who worked for the previous owner. Are they eligible? What will happen is they're allowing you to assess how they worked for the prior owner, and I think to include that with you and come up with the 12 months and the regular and systematic basis, which I think is really quite practical. Next element, for all those of you guys that were on my previous couple of webinars where I mentioned about offsetting things, the JobKeeper is not designed to offset BAS or tax liabilities. It's designed to be a facility to reimburse you for your wages. So unlike some of the stimulus payments, which I'm obviously not going to go through today, but depending on your situation, there's a lot of stimulus payments you're not going to see if you don't pay your owing PAYG monthly tax, company installment tax, and BAS amounts. But with JobKeeper, it's not going to be the case. They're going to be paying that to you because that's what it's designed to be. This is another interesting one I thought. Can I get JobKeeper if one of your employees is on work cover? Employees are not eligible if they are incapacitated or unable to work and being supported by work cover, which to me makes sense. So I won't go through the rest. That makes a lot of sense to me. What if I'm on a fixed term contract? Well, fixed term contractors are eligible if you're employed at the 1st of March and meet the other eligibility criteria. So yes, you probably would be. Compliance. This is for those guys who have been on other calls that I've had, other webinars I've had. Compliance and integrity is a very, very important part of it. As you can imagine, given the money involved and given how businesses are really struggling, this program's going to be subject to, I reckon, significant ATO compliance and audit activities and a lot of cross-checking and data matching. And they will ask questions. Don't worry, they will not hold back. This is a lot of money we're talking about. And there's going to be a self-assessment obligation on you as employees to establish your eligibility for you and your staff. And they're going to be cross-checking against other, like I mentioned before, if you get other social security monies that is income is relevant, to what eligibility, they're going to be cross-checking that you've let other government agencies know if you're in receipt of JobKeeper. And I mentioned integrity. Those guys are on that webinar the other day. Integrity is a massive part of everything. So they're letting businesses self-assess. However, if they get a sniff of integrity or things being manipulated and bent and twisted to go and artificially to get access to payments, they will be all over you. And the bottom point, there's going to be, well, they've said, significant consequences, large penalties, and even imprisonment. So I think that's thrown at people to stop blatant misuse of everything, which I get, right? But don't do this lightly. Be careful. Make sure you do it by the book, and hence make sure you've got someone helping you, guiding you through the process. What impact does JobKeeper have on workplace entitlements and obligations? Well, that's still very much up in the air at the moment. Now, they've said that employers must comply with the Fair Work Act, and I heard the other day that the Fair Work Act apparently is being amended to cater for this, and that JobKeeper does not remove workplace protections for employees, and they are enforceable with the Fair Work Ombudsman, and it's the ATO who's going to be enforcing compliance with this and making sure it's passed on to employees. Now, there's still some stuff for me that they haven't covered off on that is still loose ends. Like I've covered, after today, you guys will have a pretty good idea how most of it works. But I will say, I think the HR side of this is still very lacking, right? So things like, does annual leave and long service leave still accrue whilst on JobKeeper? How does JobKeeper really going to interact with Fair Work and HR entitlements? Another interesting HR question. If your employee earns the normal $1,000 a fortnight, which is taken from the example from before, and they're now getting $1,500, can you ask them to perform extra work or do extra hours in lieu of the additional wages? Don't know the answer to that, obviously. And the ATO said that they're going to provide alternative turnover tests for those who don't meet the 30% thing. We don't know what those tests are going to be at the moment or how they're going to be applied. How is Xero, well, I'm using Xero because that's who we use, but how's all the payroll software out there going to cater for paying super only on certain elements and not the whole gross? And how's the annual leave and sick leave entitlements, if you do get them, going to be handled with the software as well for similar things? And the last point I had, do you wait till approval from the ATO before making wage payments? Well, they've basically said, we asked them today categorically, it's self-assessment, so don't wait. But given the money that's involved, you know, as in the $1,500 per person, it's really important that you very carefully tick all the boxes, dot your I's and cross your T's with this, because there's a lot at stake if you get it wrong. And on that note, I'll finish before I take questions. I've got a few questions in front of me, Jesse, that I might take first. Before, and then I'll take the ones that you've got, because some people sent them in earlier, so I'd rather deal with them first. Okay, that is, I showed you guys in our webinar last week that we're putting together some a process and system to help our business owners get the most out of the stimulus package payments that I went through them. There's 9 possible stimulus payments that businesses are potentially all eligible for, or some element of those, maybe not all 9, but some of them. And I went through the other day examples of the sort of system and processes we're trying to put together to have the one-on-one chats, and part of the reasons we've left the one-on-one chats is we wanted to make sure all the rules were stable. Although JobKeeper is not fully finalised, I think we've got enough of the guts of it to start looking at things, and we'll have to iron out the HR issues and a few other little things that come to light over coming days. But I think there's enough there now for us to get a pretty good idea and start the ball rolling with a lot of people and iron things out. But what we're doing for our clients is trying to put all their data together in the background, wait for all the rules to be resolved, and then have one-on-one chats, which are about to start booking now that JobKeeper is pretty much nearly finalised, and then do some what-if analysis with JobKeeper to see, is it beneficial? To what level is it beneficial? Because it's not just black and white. JobKeeper is going to benefit everybody. It's not that simple, I'm telling you now. You would have got out of the other webinar I did last week on the 9 stimulus payments and how they cross over and how much you potentially get out of it. And it wasn't anywhere near as good as what everyone thought. I want to say now, JobKeeper, yes, potentially is amazing, but it's not a one shoe fits all. And there's lots of variables to this. It's not straightforward. And a part of our one-on-one chats we're doing with our clients is we're going to be crunching JobKeeper and what if analysis to see how beneficial it is, what the hidden costs are of it. And so you can factor that in together with the other 9 stimulus payments, and then come up with an action plan for each business that's basically customized for their own situation. Now, I'll quickly go through my questions. I can't answer most of them, but I'm going to quickly run through them. I wanted to know how JobKeeper impacts on employees taking personal leave and annual leave. Obviously, I can't answer that because I've said that with HR. And there's another one about are the JobKeeper eligible for annual leave for the hours they work or the 750? And how does it work with annual leave, public holidays and sick leave? Once again, don't know the answer to that until the HR stuff comes out. Next one was something again about annual leave and whether they could negotiate a lower pay rate going forward as they're closed. Once again, that's something that's going to have to come out when the HR and Fair Work stuff pops its head up. This is a really interesting one. What if casual workers who are eligible refuse to come to work? Can we let them go? Do we have to put every casual on JobKeeper? My understanding is you can choose who you want to go on JobKeeper. You're not forced anyone to put on. If you don't want to put anyone on JobKeeper, you don't have to. If you want to put everyone who's eligible on JobKeeper, you can. I don't believe there's definitely no fixed entitlements that everyone who qualifies deserves and will get it. It's not that simple at all. And the last one I had here was what's available for someone who started a business on the 30th of April. I think I've gone through that we've got to wait and see what the criteria is going to be for businesses that weren't in existence on the 1st of March and to what the alternative tests are to prove a 30% reduction. But I imagine once that happens, you'll be able to do that from there. But we'll have to wait and see what clarification comes from that. Righto, Jesse, I've covered the ones that I'd already had. I've been going flat out because I know there was a lot to cover and I wanted everyone to be able to get through to the questions as quick as we could, because at this point in time, 50 minutes, I've done well. I've covered a lot in 50 minutes. I want you guys who are potentially now not going to hang around because of time. I understand you've all given up valuable family time, and I do appreciate that. And we've covered some seriously heavy stuff. If you get nothing else out of this, what I want you to get out of it is it's not straightforward. You're going to have to be really organised and thorough with the whole process that you handle this with, and it's important that someone's got your back. And anyone got any questions? I'll throw over to Jesse now, maybe, and I'll take a breath and take a drink.
Yeah, you have a drink of water, mate, because we've got about a bazillion questions coming through. So you might need a drink and a cup of coffee while you're at it. All right, so there's a lot to go through here, guys. And Adrian, I'm just going to read them out. And some of this you would have covered, but might just need to clarify a couple little things. And ladies and gents, thank you for typing your questions into the chat and to the Q&A section there. If you think I've missed something, please just alert me. Hi, can I clarify, please? Does the $1,500 include tax, or do I pay the $192.50 on top of that? So do employees get do the employees get $1,692.50, or do they get $1,307.50?
Okay, good question. My understanding of it is the $1,500 is gross, and you'll take out the $192.50, so they'll get the difference in their hand.
Great. Okay, some of these questions have been answered, I think, already. Would like to understand the GST turnover, please, for dentists, since our services are GST free.
So hang on, what was that?
Something about GST, because dentists...
Okay, what that meant was, because I know for some of you dentists, depending on how you're structured, and depending on the service facility agreements, sometimes the payment coming back is taxable, and sometimes it's not, depending on how it's all set up. But the reality of it is, for turnover, it's going to be taxable supplies plus GST-free supplies, which, to be honest, should cover 99% of income for businesses, service businesses, et cetera, all it's excluded is input tax supplies, and I'm not going to get into that. It's going to cover 99% of business. It's going to be your true turnover, effectively. Do you know what I mean? Like, that's what it's going to be.
And I know the person who asked that question, I'm going to suggest that they get some specific advice around their tax situation as well. All right. So if a sole trader working as a contractor, registers themselves for JobKeeper, earns $1,500 for simplicity's sake from their contractee/employer in a 2-week period, what happens with the JobKeeper refund? Does it go to the sole trader as an extra payment? Or 2, does it go to the employer, the contractee? Or 3, is there no JobKeeper refund? I think I understand the nature of this question. So can I just redefine this question?
Yes, please do.
I'm not sure if I can mention names here, but if you can just tell me if I've paraphrased your question really well.
Yep.
If I'm a dentist, I'm engaged as a contractor or on an SFA, am I eligible as an employee of my own company to register for the JobKeeper payment in addition to any patient fees and commissions I might be earning?
My understanding of whether you're a company or a trust or a partnership or a sole trader, if you're running a business and pass the 30% reduction test, like we've already covered, even if you've got legitimate employees, I'll call them legitimate employees, that's probably not the right phrase, employees other than yourself, right, who are working for you, you can get JobKeeper for them. If you don't have employees, either way, if you've got employees or you don't have employees, if you're not drawing a wage because either you're not entitled to because you're a partnership or a sole trader and you can't draw a wage from yourself, or you're a trust in a company and you're either getting paid in lieu of dividends or trust distributions, you can nominate one person, so one beneficiary, one director, one partner, or one owner of the sole trader business, and that business will effectively receive $1,500 gross, but they'll have to pay you out that $1,500. So that $1,500 will effectively it'll be taxed outside to you, like as in you'll pay tax on the $1,500 coming in.
Yeah.
I hope that makes sense. Is that what do you reckon that they were chasing?
I hope so.
I don't know how else to explain it.
No, he's just said, I think he's said here, sorry, I think I phrased it badly, but Adrian answered it.
Okay, cool. That's the main thing.
Thanks. Good. All right. Here's an interesting one. Hi, Jesse. If my employee had been a permanent part-time for several years with me, but 3 months ago changed to casual, is she still eligible for JobKeeper? I feel your pain. I think,
and actually, to be honest, right now, I think they wouldn't be covered because
I don't. That's my reading of it, and I know the person who wrote this question, and I'm in the same boat, my friend.
So, look, I'd say it's bloody harsh, to be honest with you, but my read on it, on the legislation, and having spoken to the ATO a few times now, I think they're being pretty cut and dried about 1st of March, full-time, part-time, systematic casual, 12 months. I don't know. I'm hoping, because your situation is something that's pretty common, right? And there's none of us out there that can see into the future, well, not that I'm aware of anyway. So no one saw this coming, right? So you made a business decision at the time to change things that suited you and or your staff, right? So technically speaking, I think you're in trouble, but let's hope they bring out some clarification of practical on that down the track.
But they have had an employment relationship for more than 12 months, so you could seek clarification.
I would potentially, and it's beyond the scope of this webinar, of maybe some practical stuff you could consider and look at, because it's not really part of this webinar. But I think this is where I would highly advise you to speak to hopefully your really well-researched advisor and seek some HR counsel together with a tax agent and try and make it work or clarify it down the track. But technically speaking, I don't think it's going to stack up, but let's hope there's some practical way to get around, to actually make it work. Hopefully they'll come out with some practicalities in it.
Yeah, got it. And just on that, just as a little side note and a little promo, for the dentists, we are having a conversation with John Wilson, employment lawyer, around this, and we'll be running a webinar around this. And Adrian, I'll do the right thing and run it past John, but I'm sure we'll be able to extend an invitation to you and your clients.
Yeah, no dramas. Thank you. Appreciate that.
keep you posted. All right, and now his question: if you had casuals and turned them into, I think this is an HR question, Michael, but I'll ask Jess: if you had casuals and turned them into permanent part-time before the end of March, are they eligible for JobKeeper?
That's the same sort. Oh, before the end of March.
No, in reverse, I would say before the end of March.
So I would have said if they, hang on,
No, 1st of April.
were they permanent part-time at the 1st of March?
No, end of March, he says. So
Yeah, didn't he move them to casual? What was the question? I can't remember.
okay,
Hang on.
he's just typing to me. All right. So if you had casuals and turned them to permanent part-time before the end of March,
Okay.
are they eligible for JobKeeper?
That's the same question as before, really, and it'll come back to when the casuals started, whether they were long-term casual for 12 months and whether they were systematic and regular with their work. I think it's a similar question, depends on how long they were employed prior to moving to part-time, based on the current rules.
Got it. So question from Tracy, the turnover drop, does it have to be based on complete months or just 4 consecutive weeks period, e.g. mid-March to mid-April?
Well, they don't cater for mid-anything. They're until they give us alternative income tests, right? All they're giving us at the moment, because they are going to come out with alternative income tests, all they're giving us at the moment is actually thinking on the run, they were giving us in their example from before, the month of March 20 actual compared to March 19, or anticipated revenue for April 20 compared to actual April 19. So if you've got a handle on your income and you know for sure that your income is going to drop 30% guaranteed from April 20 to April 19, they've said that was one of the options available.
Okay. All righty. Cool. Now I got a question from Miss Sophie. There was previously talk that eligibility required the business/ABN to be trading for 12 months. Is that still the case from the latest release?
I think that was more around sole traders and because the reality of it is I don't believe that's a problem. That ABN thing, as far as I know, was more about sole traders, making sure they're actually running businesses. I think if you've got a business, and besides which, I think knowing you personally, I've got a feeling that because your business already had an ABN anyway, that I don't think that's going to be relevant anyway in that example. Okay. They're just wanting to make sure that businesses are actually up and running and trading is I think the intent of this.
Yeah. Okay. From Rajana, I have an employee who is part-time permanent, but she was employed on 26th of February 20. Would she be eligible? I would say you are a lucky person. That would be my take on that. I don't know. What do you reckon, Adrian?
Take out a Tatslotto ticket.
Yeah, exactly. I have a staff member who's currently on maternity leave and was planning to come back in June. I'm assuming she'll be eligible for JobKeeper. Is that correct, or is that?
Look, obviously we'll have to wait till the HR Fair Work rules, but common sense would prevail. I think that they've still had an employment link with you on the 1st of March. I would imagine that would be okay, but we'll obviously have to wait and see clarification on all that.
I would say something too there, just that you've had staff members that you've actually stood down that, you're allowed to bring back again. So
correct.
Employment relationship.
The important thing here is to have an employment relationship at the 1st of March. That's what's really important.
Yeah. Yep. Okay, cool. Here's an interesting question from Sonia. Adrian, we run a weekly pay run. So pays were processed last Monday, 6th of April, and this Monday, 13th. I've paid my people, but we're not confirmed as JobKeeper recipients yet. Do I need to go back now and top up the salaries I've paid in the past 2 weeks if the employee doesn't earn $750 that week, or do I wait to be approved for the program before implementing any back payments?
You might have missed some of this, Sonia, so I apologise, but go back and listen to it, the earlier part. What I covered in it was, pardon me, hang on, sorry, get me, so I just need a drink, hang on.
You're right. I think there's a lot of questions that have a very similar theme.
Okay.
So I'm just going to direct
with that. What they said is they're allowing a back payment to occur. So as long as whatever should be paid for April is paid by the end of April. So they've said, and I covered it in an earlier slide, they're allowing business owners a bit of flexibility, right? So if you do happen, and the other thing I'll clarify is you're not actually getting told it's self-assessment, right? So you've got to make sure that you tick the boxes. And if you tick the boxes and fill in the paperwork and because there's a lot of paperwork with this, right? If you tick the box, you've dropped your 30% under the tests that are around at the moment and any that come out since on alternate tests, and you do all the paperwork and everything you need to do, it's self-assessment. So what they're going to want, they're deemed you to have been acceptable for it. And don't worry, if you're not, they'll find out and they'll ask for the money back. Don't worry.
I don't think that's the question, Adrian. I think what she's saying is that she's reduced, and Sonia, please chime in. I think what she's saying is she's reduced people's pay down to $750. This is my understanding of the question. I could be wrong, Sonia, so you tell me. She said, we're going to JobKeeper. You're all going to be paid $750 a week or $1,500 a fortnight, whatever it is. And then if she's not accepted into that program and those people are still employed, does she need to go back and pay them what they would ordinarily have been paid prior to this whole situation?
Well, it depends on your business, because if they're effectively, it depends on what capacity your business is running, I think, because if there's obviously a lot of dentists on this, a lot of those guys will have stood people down and there's virtually no income, if anything, right, coming in. That's a different situation as someone who's running at 30%, 50%, 70%, 80%, sure, and all that sort of stuff. So I think I'm not fully getting this, but I think at the end of the day, if you think whoever you're paying, if you think they're eligible because your business is going to pass the test, and B, your employees will tick the boxes on passing, right? Then they're expecting you to pay $750 a week or $1,500 a fortnight gross to these people, and you'll get that reimbursed back to you. If they were, like in the example, if someone was earning $3,000 a week or a month or whatever it is, and a week, and you're continuing to pay that, you're going to continue to pay that anyway, and the $1,500 is going to come in. But if you're like that one, the example, if they're on $1,000 a fortnight, in that example that you're paying them $1,000 a fortnight, I think self-assessment's pretty straightforward. If you tick the boxes, I think it'll be reasonably straightforward whether you're going to get it or not. I think then you know that you've got to pay them their $750 or not.
So my suggestion for Sonia is I would wait until you find out if you're approved and not before you start going through the whole mucky repayment of stuff.
Because you can still do a catch-up payment late April, right?
Yeah, that's cool. Alrighty, so what happens, and that's the same thing, again, this is about eligibility, paying someone, like in the example, they normally get 1,000, but JobKeeper gives them 1,500 and yay, thumbs up for them. And then what happens if they're deemed not to be suitable for the JobKeeper program? Then I think, is that a lucky thing?
I think given and they're on the prior slides, whoever they are, you guys out there, go back to the earlier slides and pause it when you get the video. And when it says eligible employers and eligible employees, if you tick those boxes, right, and you're not getting into grey areas like casuals and whether they're systematic, and if you've got, I think it would be in a lot of cases reasonably straightforward whether you can or can't get it. And if not, I think you'd be wanting to seek the counsel of someone who understands this stuff, you know what I mean, as well as HR experts, if it's digging into grey areas. And certainly if it's a grey area, I don't know that I'd be encouraging you to pay those people until you've sorted through it, and then you back pay them late April. But if it's a locked in no-brainer that your 30%'s there plus, and they're permanent part-time or they're full-time or they're casuals with systematic for more than 12 months, you can, I think, confidently pay their $1,500 a fortnight and know that it's coming. Do you know what I mean?
Mm-hmm. Cool. Alrighty. I've got more questions coming in, so I'm just trying to keep up with the thing that keeps sliding over. So I'm trying to read them.
You knew this was coming, though.
I know. It's like trying to read this revolving dial of questions, so bear with me, guys. What if the 30% downturn won't show until the end of April, but we won't do too bad until the end of the quarter? What do we do then with respect to his BAS and GST and all that sort of stuff?
Well, I think I would forget about BAS as being a logical, because I know the ATO is saying that because it's easy for them, right? I would argue until we know the alternate tests, I think the two main tests you should be looking at is actual March 20 to actual March 19, or budgeted April 20 against actual April 19 as being the two main tests to see if you're 30%. Because they've said both of them allowed, no questions asked. Now, anything that doesn't fit into that box, we'll have to see what the alternative tests are. But I think it'll be, like, for instance, like I know some of you guys traded for 2/3 of March, but not trading in April. Well, I don't think it's rocket science to know that you'll be able to easily pass that when you look at that compared to April 19, right? So
I think most
self-assessment will be a no-brainer in that instance.
Yeah. All righty. Okay. All righty. So there's other questions coming through. Here we go. How do we assess turnover if our income is very irregular, such as in a trade business, i.e. large payments come in after working on a job of 6 months plus? So you got lumpy cash flow.
Okay. They've said in there, they've actually said the test, actually, I'll take you back. Hang on. Sorry. That's a good question. And I skipped over it because I know it, I tried to only cover new ground today, not old ground. Just bear with me for a second. I know exactly where it is. God, going through this, I didn't realize there was so much in there. Oh shit. Right, here. Point 2, where a business was not in operation a year earlier, or where turnover a year earlier was not representative of the usual or average turnover, they've got discretion, and the ATO will have discretion to set out alternative tests. Now, what they're talking about is lumpy businesses are going to have alternative tests because they won't fit these tests that we've come up with. Not we've come up with, the ATO have come up with. So we'll have to sit back and wait to see what alternative tests for those people who don't fit in the nice round boxes that the ATO like to put everyone in.
Yeah. All righty. All righty. So there's lots of questions about how to assess my if my casuals are eligible. I'm going to actually not get into that right now, I think, Adrian, because I think that's a question for employment law, and we've kind of said it's pretty clear. Casuals 12 months, and then there's those grey areas, but I think
Jesse, you and I have spoken about this not out of this forum, and I think it's a conversation for a switched on accountant and a HR lawyer to go through the nitpicky elements of this and see where things lie. Do you know what I mean?
I think, guys, you're going to need to have, so obviously tonight we're trying to provide an overview. You're going to need to talk to your advisors, whether it's your lawyers, your accountants, your coaches, all those sorts of people. That team are going to be able to guide you and help you work through some strategies around that as well. All right. If your wife works in the business as an employee, would she be able to claim if the practice is a trust?
Okay. If your wife, and I don't like to use the word legitimate because that's probably not the way it's intended. If she's an arm's length employee, so in other words, she's drawing a salary, a salary for a function, for a role, okay? And say you, the husband, is not drawing a salary. My understanding of this is that you will be able to get it twice, because you will be able to get it as an employee, and then, sorry, not you, your wife will be able to get it as a legitimate employee, like any other employee. So put all that in all employee baskets. If that includes you, your wife, she'll get it, right? As long as you tick the boxes on all the things we've already covered. If you, as an owner or beneficiary, are not drawing a salary, then you would be able to nominate yourself to get it, because you're allowed to have one beneficiary who's not, that's my understanding of the rules. Unless clarity comes out down the track, that's my understanding of where it is right now.
There's another question similar to that where someone had their son being paid $50 a week to provide software support. Now, I don't know how arm's length that is, but assuming it's arm's length, would that son then also be entitled to JobKeeper?
I just, without knowing details, $50 a week's not really that arm's length for me. But it would, I think, definitely, I'll tell you one thing that's going to happen, knowing the ATO,
going to look at it.
They're going to look at husband and wives and make sure you dot the I's and cross the T's so there's no manipulation. So what I mean by that is if someone's drawing 50 grand a year for their role and function, 50 grand a year is fine. And someone who's not is drawing a cent, I would imagine in no circumstances that's fine. But if someone's drawing a token salary and that's not really appropriate or arm's length, you might have issues. But we're just going to obviously, that's my take on it right now of where it's at.
Got it. Cool. So another couple of questions. Do directors have to be paid a director's fee to be eligible or a salary?
No. My understanding is if you're a shareholder or director and you're performing a role for the business, because remember, it's a trading business. It's just trading as a company. If you're a shareholder or director and don't draw anything and you're performing a role for the business, that you're able to nominate one person to effectively get the JobKeeper.
Got it. Okay. If you've negotiated and both agreed to a full-time employee changing to part-time employment during partial closure, can you pay them for the part-time loading, or does it have to be the previous full-time employment rate?
That's a HR question for me, mate. We're going to have to wait and see what Fair Work HR issues come up out of this.
Yeah,
there's going to be a lot of HR stuff that's going to be clarified, I reckon.
Yeah, and just while you're talking earlier, I've messaged our employment lawyer, John Wilson, and he's said he's more than welcome to extend the invitation to everyone as well. So for your clients as well, Adrian, you'd be welcome to come and join us. I would imagine he's going to have to sit for a little bit until he knows exactly hopefully coming day or two that they get. I hope they don't take too long to get all this clarification. Exactly right, mate, because it's changing rapidly on that front, as has been in your sphere as well. So.
Oh, hell yeah.
Yeah.
No, that's cool.
Okay. Do you classify your dental team in the pays as a stand-down category, or do you apply a certain amount of hours, even though they're only working a few hours per week, to make it up to $1,500 per fortnight? In other words, I think what Mark's asking is, if you're going to pay them $1,500, do you have to allocate a certain number of hours to get them up to $1,500, or do you just kind of have them as stand-down, or how do you account for that?
I think that's linked to
zero.
Whoops. I think that's linked to my question before. Sorry, my unallocated things from before.
Yeah.
And that is, we're going to have to sit back and see, because my initial reaction was, hang on a minute, if they're earning $1,000 a week, a fortnight, and now we're jacking it up to $1,500. I know the intent of the rule is to keep them employed and keep them off the social security books, but does that give us the right, as I mentioned before, to ask for more hours or do additional work, or are we going to be stuck? I think as in doing what they normally do. My gut's telling me, based on the way they've written everything else, that you're only going to be able to get them to do what they normally do. That's my gut feeling.
Yeah.
But we'll have to wait for clarity.
Yep. Okay. So another good question here. I've just lost it. Where'd it go? Now, I think we covered this last time, mate, but just help me out here so my memory is not too foggy. Can we pick and choose amongst the eligible employees who gets and who doesn't get JobKeeper payment? My understanding was that if you get one person on JobKeeper, everyone who's eligible gets it. Is that correct?
I don't know. I actually don't. There's been no clarification that I've found where I don't know the answer to that, and I will endeavour to, because that hasn't come up in anything I've read.
Yeah, I saw it somewhere, but I could be wrong, and that's Jacob asking that. So, Jacob, maybe you just want to talk to Adrian privately around that.
It would create disharmony too, and I don't think that's...
Yeah, I would imagine, Jesse, using the logical, practical approach that they seem to be trying to adopt here, I would imagine if anyone's eligible, they're all eligible. I would imagine, like you're saying.
I vaguely saw something on a document around that, Jacob, in one of the Facebook groups, mate. Just bear with me. I think it would cause a bit of problem in the culture of the team, but I suspect there might be some other reasons why you're asking.
So you thought that one in, all in if you're eligible. That's what you thought?
I saw something on a document somewhere around that, but I don't...
Logically, that would be the case, because they're trying to make this fair, right? So they're trying to make it as fair as possible. So yeah. I would assume, like you, that if you're eligible and you dip your toe in the water, I've got a feeling everyone's going to be in there who's eligible.
Yeah, and I've got a message here from Josh. Thanks, mate, for this. It's on the fact sheet, one in, all in. So
it's got what?
On the fact
It's on the fact sheet, is someone saying to me, and it's a one in, all in situation.
Okay, cool.
Cool. So
Which makes sense.
It does make sense. Okay, so yeah, ADA webinar said it was all or none, so thank you. The structure of our clinic is services facility agreement. The income, oh, hang on, and that's scrolling. Oh, God, where did that go? Hang on, I'm trying to read it and it's disappearing before my eyes. Where did that go? Ah, here we go. The structure of our clinic is a service facility agreement, SFA. The income of that trust receives in March 2020 is actually related to sales in February 20, where COVID lockdown was not around. Does that mean we're not eligible for the 30% reduction?
Sorry, can you say that again?
Okay, basically what they're saying is their March distribution or income is a reflection of business activity in February.
Yep.
And does that mean that they are not eligible because February was a good month, everyone was trading? Does that mean they can't demonstrate a 30% reduction in income?
I think that's in line with what I said before, and that is, if you can estimate April, they're allowing you to estimate April 20 compared to April 19. So if March was nowhere near as good and effectively reflected a 30% reduction, and that flows into April, you should be able to compare a budgeted April or estimated April for this year against your April 19. And if that drops 30%, you shouldn't have any issues based on what I covered before.
Okay. Now here's another. If your normal pay date is 5 days after the end of the pay period, is that okay, or does the money have to be received within the fortnight? I think that's going to be like it's payroll, mate. It's
I think that like what I covered before. I think that's where because the ATO have got designated pay slots and pay dates, there's no way everyone's going to agree. And I personally don't think there's any point in trying to align your pay period with the JobKeeper just for JobKeeper's sake. Remember, it's only around for 6 months, right? I think they'll be. Well, I'm hoping they'll be practical about applying it based on periods, if you know what I mean. Like,
yeah, Vic, I think you're going to need to get some one-on-one with that one, mate. But again, we can talk about that. Sorry, guys, this has ticked through. I'm sure I've missed something somewhere. If you think I've missed your question, please copy and paste it and drop it in, and I'll be happy to come back to it. Correct to say we must pay all super on all hours actually worked or none on the hours not worked. I'm not sure what that means. How does JobKeeper tie in with the PAYG boost payments from Glenn?
Okay. The beauty of JobKeeper is, that's a good question actually, which is obviously I covered the other day. I encourage whoever this is to watch my webinar last Tuesday night, I think it was, where I went over the 9 stimulus measures excluding JobKeeper and how they cross over each other. I won't go over all that ground, but JobKeeper income comes in that you pay your wages against. What the beauty of JobKeeper is going to do, if this person may or may not remember, there's 2 tax-free booster payments that are based on your employee's PAYG tax withheld, and the second element of the booster is based on what you get in the first element of the booster. And you only get the second element of the booster if you keep employing and paying wages. So, for instance, if you're shut, there's no way you're going to keep employing people without this JobKeeper, right? So I think part of the JobKeeper program has been put in place so that you continue to employ people through this period and hence qualify for the booster part 2 payment. Which without that, if you weren't paying for the employees, you wouldn't qualify for the stimulus part 2. And that's probably all I'll cover today because I go into a lot more detail in my prior webinar about that. I think, Jesse, that makes sense?
Yeah, it does. It does. Okay, so I have 2 employees still getting paid through this month while the other 3 chose to leave without pay. Can I claim for the 2 employees this month and then start claiming for the other 3 employees next month when they start paying them again as we're reopening and then clerical work at least? They're re-engaging 3 people. They've got sounds like they've got 5. 2 are still working. That's fine. 3 have gone off on a temporary
shut down. So they were shut down.
Yep.
Stood down. Sorry, stood down.
Stood down. And when they come back, they're eligible, correct?
As long as they were employees on the 1st of March.
Perfect. All right. Hopefully that answers your question, mate. Alrighty. From Simon, for employees who are claiming JobKeeper from their other employer, can we furlough these employees and still keep in the spirit of the process? I don't quite know what furlough means. You need to put it in plain speak for me, mate.
I think what they're asking, I might be wrong. I think what they're asking is if I'm an employee over here and I'm a sole trader over here, am I eligible to get JobKeeper in both scenarios? Until it's clarified, I would argue potentially yes. If you're a legitimate arm's length employee sitting over here and your employer giving JobKeeper to help pay that, and you're a sole trader running your sole trader business to the side here, because they're separate businesses, I would imagine. I don't know, this is all hypothetics, I'm assuming. As long as you pass the 30% test, until the ATO come out with more clarification, if they do, potentially I would say yes, but that might be something we need to explore.
Cool. Thank you for extended leave of absence. Yeah, I've had a couple of people fill me in on. Thanks, fellas, Cal and Simon. Appreciate it. Alrighty. I've got a repeat question. One I missed. My apologies to Gary here. I did miss this in the scrolling thing, mate. So let me ask this question for you. So just to clarify, super must be paid on the 1,500, yes or no?
What you need depends on your employee. So using my 3 examples from before, you've got someone who's getting $3,000 gross a fortnight, right? And you've got someone who's, this is before JobKeeper, right? So in a normal environment, they're getting 1,000 part-time gross, and there's someone who's stood down, okay? In that example, the $3,000 employee, you pay 9.5% on the whole $3,000 salary, and the JobKeeper comes in and supplement you. On the $1,000 employee, you pay 9.5% super on the 1,000 only, which is their true gross wage, and the $500 you don't have to pay super on. And the 1,500 guy who's you're standing back on, no super.
What about if it was 3,500? So that you're actually the JobKeeper is now 3,000. I was being paid
that's 3,000 a fortnight they're doing.
So I was being paid 3,500, but now I go down to 3,000. Does the super have to be paid on the 3.5, or does it have to be paid on the 3? I say 3.
I don't know the answer to that until they clarify it, but I think what they're trying to do, I'll come back to that in a second. I think what they're trying to do is make sure that you're not out of pocket for the extra money you're paying to someone for the super on it, right? So for in the 3 examples, the person stood down, no super because they're not getting anything, right? They weren't getting anything prior. The $1,000 one, they're normally getting 1,000, so you don't have to pay super on the difference. Using your example, I would assume the 3.5 down to 3, it's still above the 1,500, so I would assume you got to pay super on whatever you're paying them.
3,000.
Yeah, on the 3 in your example.
Yeah.
Alrighty. Guys, I think I've gone through all the questions. If I've missed anything, please just type it into the chat box or give me a nudge or a prompt. And if I have, I'll make sure I get that asked for you. I think we've covered most of them. There's a new one coming in here. Missed this one. Thanks, Emma. If you're in a trust scenario where you're getting drawings at the end of the financial year, do you have to pay the fortnightly payments to the trust beneficiary like an employee?
I think I covered this before. If you're a trust and you're not an employee, you can nominate one beneficiary to get the JobKeeper payment. Is that what she's asking? I'm not sure.
Yeah, I think so. Emma,
can you clarify, Emma, if that's what you're asking? I think that's what you're asking.
Yeah. Okay. All right. Obviously, I've missed a few. There's a couple coming through. Sorry, guys. It's just like this constantly scrolling thing that you lose track of where you are. All right. I know we have asked this one, mate, and I can't remember what your response was, but we'll need to just watch the video. But just really quickly, do we pay the $192 tax withheld to the ATO or hold on to it and the ATO will just reimburse us?
Now, my understanding, because this payment is in arrears, what you'll need to do is remit your wages like you would any other month as if you're not getting JobKeeper. So the $1,500, if you had 10 employees, you pay them $15,000 a fortnight, right? And you're going to deduct $1,920.50 out of all of them. And at the end of the month, if you're doing a monthly PAYG withholding payment to the ATO for the withholding tax. You'll pay that amount to the ATO, the 192050, right? And then down the track, you'll get the 15 grand back the next month, the whole 15 each fortnight. I think that's what they're asking.
I think so. All right, so I'm coming back to Emma where I didn't quite get the question. So I'm going to repeat the question and then I'm going to go back and give you her supplementary notes. If you're in a trust scenario where you're getting drawings at the end of the financial year, do you have to pay the fortnightly payments to the trust beneficiary like an employee? Then she's got down here, the fortnightly payment part of it, should that be paid now? And then she's added, do you have to pay the trust beneficiary the $3,000 before the end of April?
So if they're not an employee, I think that's what you're saying. They're not employed. I would imagine what's going to happen is, and obviously may get clarification of this. Let's say you're getting, let's call it $3 grand a month because it's easier to say that. $3 grand, $1,500 a fortnight for 2 fortnights. Just call it $3 grand. It's simpler. If that $3 grand, all it really means is you're going to get $3 grand in, right, to the trust from the ATO, and I think it's expected that $3 grand will be paid out to that beneficiary and be declared as taxable income in their return as a distribution.
Okay.
I think that's what is anticipated.
And I'm going to suggest to Emma, I think you're going to need a bit of one-on-one specific advice to her on that too. Shannon has said, can we pay super on the average wage that part-time and their wages vary?
Super's done on gross wages. That's getting into, super's normally done on ordinary time earnings which is probably beyond the scope of here, but super's normally paid on ordinary time earnings, which generally speaking, I'd probably want a one-on-one chat to discuss this because there are some nuances with super and what you actually have to pay. But generally speaking, it's done on gross wages. So your super will be paid on your gross wages, whether they're a part-timer or a casual or a full-timer. That's a general thing though, okay?
Okay, here's an interesting question. I think I might know the answer. Hi, we have one employee who we employed after March, so she does not qualify for JobKeeper.
No.
Okay, no, she doesn't. But the question that comes after this is the interesting bit. Can we nominate her to receive JobKeeper for the trust?
Yes, you can, if they're a beneficiary.
If they're a beneficiary. So
because if they're a partnership, it has to be a partner. If it's a company, they need to be a director or a shareholder.
Yeah,
if it's a sole trader, you need to be the owner, or if it's a trust, it has to be beneficiary.
Yeah, this is an employee they want.
No, then no.
No. Okay. All right. So, Ricky, all right. Will the director have to be paid now the $1,500 per fortnight for the month of April, even if they weren't drawing wages before?
They don't have to be drawing wages. Remember, like what I just said before, if they're not, they allow a director or a shareholder to be a nominated individual. So I think like with the trust scenario, I think the idea behind it is the $3 grand comes in, the $3 grand goes out.
But where does it go into?
It goes to the individual's bank account. My understanding is,
how does the tax office know?
Because you're nominating their individual, they're going to expect to see that income in their tax return.
Yeah. Okay. Alrighty. So one last question, I think, is what happens if you make an employee redundant during the JobKeeper program using this time to restructure for efficiency and getting rid of toxic people? I think that's an
That's a HR question because that's going to get pretty deep. That's a really good question, and that's definitely a HR related question.
Yeah. Okay. So that's a conversation for John. Guys, I think I've covered them all. If I haven't got them all, please type them in one last round, and then I think we'll call it. Just while we are waiting for anything to come in, couple little notes. The first note is we will be running an employment law webinar. My employment lawyer, John Wilson, is a specialist employment lawyer. That's all he does. He's been looking after my employment law stuff now for 15 or more years. He's a guy I really know and trust very, very well. And so we'll be promoting that. We'll be promoting and letting you know about that. With respect to, I've had other people just come back and ask me again about recordings of this webinar. Adrian will, of course, email the Superior Accounting Group clients, the recording. But for those people in our world, we'll be putting that recording up into the Savvy Dentist Academy, and I'd encourage you to grab it there. So hopefully that makes sense. Okay, sorry, there was a couple of questions I did miss, Adrian. If we're applying for a trainee wage subsidy as part of the stimulus, can we get JobKeeper for the same in trainees?
Off the top of my head, I don't know the answer to that, because they did bring something out this afternoon on that, but I didn't because of the last minute nature of everything that I put together. I haven't assessed that. I can't answer that honestly right now, but okay. There is something that's been put out about it, but I haven't, before this call webinar, I didn't have a chance to look at it.
Alrighty. All right. So if we are director, do we start taking $3,000 per month and allocate it as owner drawings?
Is that are we talking company? Is that?
She said, let me try again. If you're a director, should you start paying yourself $3,000 per month and allocate it as owner drawings or something else? So you get. Is
this the trust scenario again?
I don't know.
Well, I think what they're expecting to see, whether it's a company or a trust, this is what I expect, right?
Adrian, it's from Shannon. I believe you know Shannon.
Pardon?
Shannon.
I believe the intent of this is that $3,000 goes in. I'm using $3,000 because it's not that simple, but just to keep it simple, $3,000 goes in as income to the trust or company, right? Being the JobKeeper payment, which is taxable. They expect whoever the nominated individual is, that $3,000 goes out to them into their bank account and is taxable to them on the way out. Because if you think about a normal employment relationship, like the examples, if you're having your wage paid, right, the only difference is if you're drawing a gross wage from a business, your employer will pay you that $1,500 and deduct the tax, right? So the $1,500 comes into that employer, they declare that as income. On the way out, they claim it as a gross wage and deduct the tax, and you get the difference, right? And the ATO would expect the income to show in the employer's accounts and tax returns, and that the wage would be income to the employee, right? What they're expecting is a mirror of that where it's not an employment relationship. So where it's a trust and a company, what they're expecting is the $1,500 goes into the company or the trust, that's income to the company or the trust, and they're expecting that to be paid out to the nominated individual, director, beneficiary, whoever it ends up being, and that will effectively be income to them in their return. That's what they're expecting to see without any clarification of that. But that's, I know, the intent behind this.
Yep, got it. Okay. All right. This is a question I asked earlier, but I perhaps didn't ask it in the way it was intended. There's a couple who I know, they're both dentists, they're both directors of the company, they both get paid a salary and director's fee for the company. Are they both eligible for JobKeeper?
If they are, and I don't want to use, let's call them arm's length employees.
These are rigid employees.
Yeah, then they're both going to get it. Nita and I, okay, I'll answer this question. Nita and I are both employees of our business. We're both going to be eligible for JobKeeper because we're full-time employees. Yeah. And all that sort of stuff, right? So no questions, that's not a problem.
Got it. Okay, hopefully that makes sense, Jeremy. All right, we've got one really complicated question here, mate, but I think this is probably going to be a one-to-one advice thing, but I'll ask it just in case, sorry. Can the same person be nominated as a beneficiary of a trust, but then also as a sole trader on a service facility agreement working for that trust? i.e. I'm the beneficiary of my trust for my clinic, but I'm also a dentist there under an SFA agreement. I don't know that you can double dip, really.
I would imagine the intent of this is no double dip. So I would say without clarification, because understand something, guys, it's like when any law comes out, this is new. There's going to be a lot of bedding down over the next few weeks where there'll be lots of little clarification things fly around. In this situation, this is what you do. In this situation, we don't know all of that yet, which is why I said at the end of my presentation, I came up with 2 pages of unanswered questions. There will be another 10 pages of unanswered questions that I don't know about that will come out, that will clarify all these little, because you're not going to be the only one who's thinking it. I guarantee it. There's going to be hundreds and thousands of people, and this will all be dealt with, but it might take weeks, and that's the problem.
And the ATO is going to be checking, double checking.
Absolutely. But I know the intent is to not allow double dipping. right? So I would be surprised if that would be allowed.
Yeah, I'd be surprised too. Okay, one of my employees is eligible for JobKeeper from 2 different employees. Now, what happens here? Could we potentially end up paying her and then miss out being reimbursed if she use the other employer for
okay.
JobKeeper?
I would encourage this person to watch this back over again. And there's an employment agreement document that needs to be signed by the employer and the employee where they agree to nominate you as their employer and you as their employee, so that there's no way you can get that wrong because of the paperwork. You can't sign it twice.
Yeah, so I would be encouraging you to have that conversation pretty early.
Yes, absolutely.
Don't leave it.
Yeah, get in first. Get in first where you can.
Yeah. All right. Okay. Last question, guys. So as a sole trader, do I have to borrow money to pay myself $1,500 and then claim it back on JobKeeper? I don't know about borrow money, but...
Is that the same thing as what we've said before?
I think it is.
As a sole trader, you can nominate yourself. So you'll receive the money and that'll be deemed to be income to you on the way out.
Yeah, but you've got to pay yourself first. That's the thing, right? So
whether it be partner, trust, company, sole trader, they're all the same concept.
Yeah, but they've got to be paid.
But you've got to have, yes, you have to pay it first.
You have to pay it first. And I guess if you don't have that, yes, you do have to pay first. And if you don't have that cash in your bank accounts, then you'll need to find a way to find it.
Until we get any further clarification about, because it is a little bit unique, that situation, because you're not drawing a wage where you physically pay coin out, right? It's drawings. So there might be a little leeway granted here where you don't physically need to draw it, where it's left hand talking to right hand. Do you know what I mean? And you're not trying to pay a wage. Who knows? We'll have to sit back and wait and see. I would imagine they'll come out and clarify that you don't have to draw that money out, because it's deemed to be taken out to you anyway. Do you know what I mean? I would imagine that will clarify in time.
And again, I think you'll need to talk to your accountant around that. Adrian, I think that's covered everyone there, mate. I think we've gone through a lot of questions. There's a lot of people hanging around for questions, and I thank you all for doing so. I always find when I get on a webinar, I learn as much from other people's questions as I do from my own.
Absolutely. Absolutely.
So I know we've gone over a few things a couple of times, but we're trying to make sure that everyone gets what they need in as timely way as possible. As we wrap up, I do want to just take a moment to acknowledge the huge amount of work that goes into putting presentations together. It's what I do for a living, and I know Adrian has put not one presentation together on this topic, but 3. As we said earlier, he's had to rewrite this 3 times, which is an incredible amount of work, and it's obviously trying to give you the most current, up-to-date information as it comes to hand. And so, Adrian, I really want to say thank you so much for doing that. As I said earlier, writing 1 presentation is enough, but doing 3 is a lot. So thank you for taking the time and putting the effort to bring this information to us. For all the people on the call that are part of the Superior Accounting family, I know that this will be emailed out to you by Adrian and his team, and I'm part of that family as well. So thank you to all your team, Adrian, for the work that they do as well. I know it's a team effort. And for all the people who are part of the Savvy Dentist family, again, that will be up in our academy just as soon as we can get it up over the next 24 to 36 hours.
Mate, I'll get it to you as soon as I can. I'll get it to you as soon as I possibly can.
Thanks, mate.
Worst case tomorrow. Worst case will be tomorrow.
Right, and then we'll edit out the bits of me making doofus of myself and then post it. No, I'm joking. All right, so that's it from us here tonight, guys. Have a really lovely evening. Again, Adrian and Anita, thank you so much for all your help and support, and looking forward to catching up with everyone soon.
Can I finish by saying something really quickly?
Yeah.
I've still got some breath left. Thank you for all those kind words. I appreciate it. Yes, a lot of time, probably more went into this one than the combination of 2 or 3 others. But anyway,
wasn't happy this afternoon.
And I wasn't. I asked Nita the dummy spit I had this afternoon when I saw all that information come in, and I went, "How am I going to get this done on time?" But anyway, I'm glad no one else was in the room. Put it that way. We all lose our shit at different times. Don't worry. But what I was going to say is, over coming days, when at some point I think there's been a lot more questions answered about some of these little nitpicky areas, we might run a quick webinar again where we just go through the nitpick areas that have been clarified or something. But I don't know whether that'll be in weeks, 2 weeks, 3 weeks, days. It depends on when it all comes out and when I get a chance to assess it. But knowing the ATO, this could probably take a few weeks before we really get some clarity on a lot of the little bits and pieces that go into this. But my endeavours will be, once I think we've got the major stuff covered off, I might do a quick webinar on just those bits, so everyone's got the complete picture on top of what we've already covered. So we'll watch this space in due course, but that's my intent. And thank you everyone for giving up your valuable time. I know there's been a lot of webinars the last 3 weeks, but that's not my fault or Jesse's fault. That's the tax office and the government's fault. We're just trying to educate you guys.
I'd like to say thanks to Jesse too, for people to be leaning on him, so it's giving you these opportunities to have these sort of things. It's fantastic.
Yeah. And thank you for your time, everybody. Really appreciate it. And it's really important in these times that you lean on your business coach, your tax agent, and your legal team and HR guys and advisors, because their advice is crucial at this time of more than ever before. So make sure you lean on them for their expertise. And on that note, take care. And until I speak to you all again, thanks for your time and attendance.
Night all.
Good night, everyone.